We think while there is a risk of a hike at a meeting next week, more likely we're looking at next month. And the reason for that is this: there's going to be much more data on the table. They get the tech-in survey, as you know, you get more, you get the final results from the Shento negotiations as well. And all of that will probably give the BOJ a more informed decision. Now, what does that mean for the yen? Well, interestingly, moving into the March meeting now, as we have seen, in previous meetings as well, generally we see a little bit, well, today you might have seen a weaker yen on the back of a stronger dollar overnight, but generally we have seen a little bit of a stronger yen broadly over the past few weeks ahead of this meeting in anticipation of this rate hike that might take place. And we have seen that ahead of every meeting where there's some expectation of policy. Most of the time, markets tend to get disappointed, and then we see a return to a weaker yen story. So going into this meeting, again, we think, we're probably not going to see sustainable yen upside from here.
Yeah, that seems to be the growing consensus, that 145 tops is the base for where the yen would stabilize. But do you not think that the rate differential story, which may start with the Fed cutting rates, may lead to more strength in the currency?
Sure. I guess when you're looking at 6 months ahead or 9 months ahead, sure, we think that the dollar yen will likely be at 136. And that's really going to come from the US dollar side of things rather than the yen side of things. Of course, we expect the Fed to start cutting in Q3, and that's probably going to, front-end yields are going to start moving lower again. I think next week's Fed meeting is very important in that respect, and clearly that's going to drive dollar yen to that 136 level into year end.